Okay, as long as the trend is up, even if you enter a trade in any of this support and resistance, you are likely going to be in profit most time. Look at what will happen. Assuming you enter a trade here because you discover that line, even though the price is dropping, you are still holding your trade. Then at this second line, you make another entry. So this is your first entry here. This one is the second entry right here. So you make another entry and the price is trending to the downside again. At this point, you had this first spike, then the second one follows. Okay, now you still holding your trade. The price start dropping again, put you in losses again, and coming down to this point, you can actually enter another trade here. Okay, now at this point you had this spike, then we had another spike, so everything now is in profit and you're already making money. So that's how you scale in. So you'll be wondering how this, maybe when you see me in some videos, you see me enter some positions, not just 3, not just 2 or something, you'll be wondering, how do I should actually enter this position? This is how you enter the position. When you enter a trade, and maybe in your first position the spike is not coming, you are targeting the next entry point, which might be your support or resistance. So you enter again. If the spike didn't come, you are targeting the third one. All right, so with this, whenever the spike starts coming, you are going to be in massive profit. You are going to recover everything. But make sure that whenever you are scaling in, the price is trending to the upside on boom. If you're on crash, make sure that the price is trending to the downside if you are scaling in. Okay, don't scale in when the price is trending down, like this one right here. Sorry, so from here now the price is trending down. You are not expected to scale in because the price won't drop massively to the downside. You are just catching maybe 1 or 2 spikes because the trend is up. All right, sorry, the trend is down on boom. The trend is down. So whenever the trend is down, you are not scaling in. You are just catching 1 spike or 2. Okay, but when the price is massively trending to the upside, you are expected to scale in. Okay, you can backtest these things yourself and see how it works. Okay, so you can see how the price still respects all these lines. Okay, you can see how the price respects these lines. So you just need to understand how these things work and you enjoy. Okay, so you make sure you check out the higher time frame, 4 hours time frame. Start drawing your support and resistance using lines. Okay, you use lines. Then on maybe you come down to 1 hour time frame to modify, and then 15 minutes time frame, 5 minutes time frame, or 1 minute time frame for entry. So we can still quickly do this on Crash 300. So let's use Crash 300 for instance. So if you look, Crash 300 is trending up, so we are not actually expecting massive spikes to the downside. So the price have been up all this while. Okay, so let me just look for another example of when we are having a downtrend, so that it will be more easier to draw. This is actually an uptrend again. The price is up. Let me confirm this on Crash 200 too. The price is up also. Indices have been up for a very long time. So this one is also ranging. So we can actually draw it here again. We can actually do the same thing right here. So let's use this 1000, Crash 1000 for example. I will change it to draw my support and resistance. Okay, so at this point I'll just pause this video and draw it so that this video will not be that long. Okay, so you know already what I'm going to do. I'm going to be drawing this, all these swing points. I'm going to be putting in my horizontal line as support and resistance, guys. Okay, so guys, I've already marked out my lines. So already here, and I've changed it to candlesticks. The price is ranging actually currently on Crash 1000. So but I still line. Okay, that is using my line chart. I still mark out my support and resistance right here. So I'll still turn this back to that is candlestick chart. Okay, then you can actually see how this thing works. Okay, so now you can see from here, if I should go down to my entry point, which is 5 minutes time frame, the price is trending up right now. So I'm just looking for catching just one spikes. So coming down to this point where the price is ranging, you can start looking for how to actually catch spikes. Okay, so if you pay close attention, you're going to see how the price respects all these lines. Okay, so the price actually respects our lines. So what you are looking for now, like here, what you are looking for is once the price is approaching your line, okay, you are going to make entry and you wait patiently for the spikes. Okay, you can see how massive this one is. So let's say the price is also coming back to this particular zone. This is where you are going to be losing out some trades. For instance, the price is coming up here. You might be expecting the price to spike here. Okay, the price keep going up. You might enter here to scale in. The price will still keep going up. Then you enter here, you cut this spike, recover some, and you might still be holding this price thinking it's going down. So it's going to push to the downside, it's going to spike to the downside. So there's no strategy. I keep saying it almost on my videos. There's no strategy that is 100%. So that's why risk management is very important, and that's the last thing I'm going to be talking about in this video. Risk management. Okay, so what do I mean by risk management? In each of your trade, you should have certain amount of money you want to risk, or certain percentage of your trading capital you want to risk. So even though you are going to be scaling in, looking for entries, okay, on this zone that is at support and resistance zone, okay, but you need to make a decision, okay, on how much or which percentage of your account are you going to be risking per trade. So assuming you are risking maybe 5% of your trading capital, for instance, and you have $500 or you have $5,000, any amount you're using, you know what 5%. Then you enter your first trade here, second trade here, and at this point, maybe at this point, this is the point where your 5%, okay, will be kind of exhausted. Then you close your trade, even whether the spike is coming or not. Close your trade. Okay, so that means that's a losing trade, right? You wait for another opportunity for you to recover it and you know make more money. So you don't just because you thought about scaling it, price is going against you, you enter the trade. Maybe you enter your trade at this zone, that's the first point you enter your trade, or even here the price is going against you. Here you enter another one, here the price is going against you, enter another one, here the price is going against you. You are not checking if you are risking more than the percentage you want to risk per trade. So you need to always make a decision in your trading plan. How much are you going to be risking per trade, or which percentage of your trading capital are you going to be risking? So once is you set your stop loss here and the price keep going to this level, don't shift it, because a lot of us will just shift it and thinking, oh, the spike might come now, maybe if I close it the spike will come. If it comes, that's it, it's not for you. So you mustn't wait until the spikes come, because sometimes the trend can change and the price will keep pushing to the upside, and you keep waiting because you heard about scaling in and you keep scaling in. Before you know it, your account is gone. All right, so that's why it's always good to trade to catch spikes once the price is trending to the downside on crash, and when the price turns to the upside on boom. That's the perfect time to catch spikes on boom and crash. Okay, so you need to understand the importance of trends, okay, because trend will help you a lot when it comes to catching of spikes, guys. Okay, that's for this video. I hope you enjoyed this. I hope it's helpful. Please remember to always manage your account. Okay, then remember, if you want to learn trading, you want to learn different strategies that I use, okay, go to my website at kingsfstraders.com and sign up. Okay, then you can actually pay for the course there and take my full course on synthetic indices. Okay, the course is designed just for people who trade synthetic indices alone. This is not for currency or anything. How to trade boom and crash. You are going to see even scalping strategy, how to pick 15-20 candlesticks or without spike. Okay, all those things are there. If you want to check out the courses, you can go to my website at kingsfstraders.com. Then if you want to sign up for boom and crash, if you don't have it or you want to start trading synthetic indices, I will leave a link of the broker I'm using in this description of this video. You can actually check the description and sign up, okay, and start trading. You can do this on MetaTrader 5. I'll see you guys in the next one. Hope you enjoyed this. Bye for now, guys.